Okay, my God team, welcome back to the channel. Thanks for tuning into today's video. We have a lot to talk about today. I'm going to go ahead and get right into it. First and foremost, if you're new to the channel, welcome to the channel. We do daily updates of Bitcoin, the market, the economy, whole range of more stuff. We do the most in-depth and practical technical analysis on the market, the most objective, the most truthful, and we don't apply any of our emotions or opinions into these charts. And because we do that, we've been able to predict the entire move downwards with absolute precision. Let's go ahead and talk about this recent move first and foremost. We'll talk about a lot more today, do some technicals, run some charts. We're doing a lot today, but we want to talk about this recent move. And before we do that, head down to the pinned comment, click the link, join our Telegram channel, get access to daily updates, market analysis, all our videos, charts, and much more stuff. So, is this recent move, and I'm talking about recent move from $18,000, is this move from $18,000 a bull trap? Is it a fake out? Is it some kind of, scare tactic to get people in the market before we dump on them again? And the simple answer to that is no. If you think this is a bull trap or a fake out, all you are doing is simply coping with the fact, or helping yourself cope with the fact that you missed a very obvious, and I'm not going to sugarcoat it, an incredibly obvious bottom. And it was so obvious that not only did we predict it like 10 months in advance, we were telling everyone for weeks to be looking to enter at $18,000 before we even lost this trend line. Okay, so it was a very obvious bottom. If you missed it, you simply were allowing fear to get the best of you. You were letting your emotions to get to the best of you. You were expecting the price to go lower with the economy. You were hoping that would happen, and you missed the move. Now, it doesn't mean it can't go lower from here. That's still a possibility. Obviously, the economy is not looking great. We'll talk about that later in video. But if you miss this move, do not start running around attacking people because they caught it. Don't start running around saying you're overly bullish, whatever. It was a 40% move. You missed a 40% move. Reassess how you're looking at the market. If you can miss a 40% move, how do you ever think you're going to be able to call the bottom? How do you ever think you're going to be able to call the top? How do you ever think you're going to be able to catch the next 40% move? Okay, it is as simple as that. The strategies, the information, the technicals, whatever you're doing to confirm your moves, you need to reassess those, because a 40% move was not insignificant. It is not a fake out. It is not a bull trap. It is a 40% move from a lower support range to the next major support range. It is a swing in the market. That is all it is. Okay. So taking a look what happens next, guys, and we've talked about this a lot. We are in this massive 1-day horizontal resistance, which we did find ourselves stuck in for about 8 days in 2020 over here before this parabolic push upwards, even higher. Now, obviously history doesn't always repeat itself, but it is kind of similar. And by similar, I mean that we are still within this horizontal resistance range currently. And little to no surprise, we are finding a lot of resistance, a lot of volatility, a lot of sideways chop, and a lot of uncertainty. And that's in combination, or should I say, that's exacerbated by the fact that yes, CPI is coming out in 3 or 4 days. And obviously with CPI, with economic news, we always see the markets react with volatility. Expect certain price action, and people don't like to overposition themselves moving into economic data. Personally, I don't trade moving into economic data. I wait for economic data to pass, and then I will take trades. Just like we had the NFP the other day, I didn't trade into that. I waited for it to pass, and I caught over 300% profit on the bounce after it just by waiting 15 minutes until the data passed. I'll be doing the same thing this time around, but we're taking a look at the horizontal range. The next move upwards will be confirmed once we break 23,800. Okay, if we break 23,800, we need a daily close above 23,800. Okay, we need a daily close above 23,800. That would be a strong sign that we push upwards into this range. Okay, this range is going to be our next major resistance. We can see on this chart, very straightforward chart. When we come down into this lower area, okay, we find support. We look for entries. All right. That was very straightforward. When we come into this upper area, we are looking to sell. We're looking for resistance. Okay. Now, this is our macro downtrend. This is our bear market. We are still in a bear market. The bottom doesn't mean we're out of the bear market. The bottom occurs in the bear market. We're still in a macro bear market. When we break out of this macro descending channel, that is when we've broken from the bear market. We are now in neutral territory. We're looking to reclaim some zones. Zones we're looking at, this zone over here, we're looking to push past this zone, and then we're starting to build that bullish momentum that could potentially push us to new highs. Okay. So for the short term, guys, and I've said this in the last few videos, what you should be doing right now is nothing but taking small scalps, all right? Potential setups for swings, selling things or shorting things at major resistances, looking to pick up things at major supports, but I wouldn't be putting too much capital if you have not already invested, if you have not already bought Bitcoin at 18,000, 19,000, where we suggested, okay? You should not be doing so right now. This is not the time to do it. The next entries would be above 23,800, okay? Because if we do push lower here, we can come down and retest this short-term uptrend. And this short-term uptrend, as we can see, has acted as a little bit of a short-term uptrend since, mid-July, so about 3 weeks now. And obviously we do have a lot of support below us. We have this horizontal support range. We have our diagonal support range over here. And worst comes to worst, if we do reject from this level, potentially create a new low, we could see the price come back down and retest this uptrending support line again one more time before we push back upwards. That is a real possibility. Now, this move down does not take away from the significance of this move up. This move down does not take away any significance from that move up. It doesn't invalidate that move up. It doesn't invalidate the bottom. The bottom only becomes invalidated, guys, when we lose that bottom again. Okay, so until that point, there's been no invalidations. Now, if you've been following on the channel, if you've been paying attention, your initial purchase of Bitcoin would have been right over here, okay? You would have sold for a 20% profit over here, and your re-entry would have taken place at $18,000 here, okay? So even if you bought Bitcoin at 18,000 here, you're up, you've confirmed the 20% profit, and you're currently sitting at 23% profit, okay? So that's a 40% in total. So say, for example, Bitcoin goes back here and crashes down. Bitcoin, for you to be at a loss following our instructions, would have to drop below $14,800 to be at a loss from your purchase. We have set you guys up perfectly on this channel for the best opportunity to make profits. Again, factual information, not letting emotions get involved in your decisions, keeping it factual, trust the charts, trust the technicals, and think ahead of the curve. You need to think outside the box. Lagging indicators, like I said before, lagging indicators, technical indicators, they're particularly good at predicting trends. They're really good at predicting trend strength. What they're not so good at, and what a lot of technical analysts fail to see, is they're not very good at predicting the bottom. They're awful at predicting the bottom because they're lagging. Generally, when we come close to the bottom, okay, here, we've had massive volatility leading up into the bottom, and a lot of technical indicators are still lagging. The data is still lagging, it's still recording, it's still averaging in, smoothing in all this rapid volatility, it's 40% move. So of course, when you come down here, the indicators are going to look incredibly bearish. Of course, they're going to look bearish. Of course, you think we're going to go lower, but you need to be able to understand first and foremost, what do the technical indicators actually tell you? Okay, what are they actually saying? How is that relevant to the price action? Okay, how can you apply macro structures? How can you infer that technical information onto the charts, onto a real price action, and make a prediction of what the technical indicators are going to look like if they have caught up? And then once you've made that prediction, you can predict where the price is going to head from there. So you almost have to predict what the indicators will look like if they weren't lagging, and then be able to predict what they can tell you going forward. And that is how you get your price prediction. That is why we're always like 10 steps ahead of the market. That is why we predicted the top. That is why we predicted the bottom. That's why we told you on 21st of July, we're going back up to 70,000. That's why we told you on the 4th of April that we're going to crash down to 28,000, because we're always 10 steps ahead of this market. Now, a lot of people are thinking, okay, well, what now then? Well, I'm telling you what now, I don't know. I really don't know. This horizontal sideways chop action is not something you can predict easily. It is almost like a coin flip. All you can do in this scenario right now is wait, scalp trade, take some profits here and there, make a few trades. But if you really want to find out the direction, we have to be looking for breakouts of the zone. Okay, this whole entire zone here, we are waiting for a break to confirm the next move, okay? And you don't always need to be in the market. Just jumping on the big moves is what you need to do, okay? So we're waiting for that next big move, potentially push upwards here, we enter. Down here, we enter. And we've still got our spot longs, we're still holding, we're still ready to go no matter what happens, okay? Let's go ahead and talk about some technicals. Now, for everyone who watches me, you know how much I love the RSI, and I've been saying this for years now. The RSI is literally my favorite indicator out there. RSI, Gaussian channel, Ichimoku cloud, my top 3 indicators. And obviously every tool in your arsenal is just a tool. No tool is better than the other tool. No tool is particularly, the one and only tool you need to trade the market perfectly. Every single tool, every technical indicator every bit of information, it tells you something new, it tells you something different. And it's all about how well you know how to understand what it's telling you, how well you can read it, and how well you can apply it. And I use an analogy, which is an awful analogy, and forgive me, this is gonna be a freaking terrible analogy. Imagine you're trying to like screw a bolt into the wall or something, all right? You want to use a screwdriver, right? You're not going to go ahead and use a wrench. If you use a wrench, maybe you could do it. It could be pretty slow. You'll probably get the job done, but you're not going to be as efficient. If you use a screwdriver, it's going to go in nice and quickly, nice and effectively, all right? Now, if you're really good at using a tool, you're probably going to get a quicker, more effective, and better screw. It's going to be tighter, it's going to be more stable, all right? Whereas if you're not as good, it's not going to be as good. So it's not technically the tool that you're using is letting you down. It's your understanding of how to use it, when to apply it, and what information you can gather from it that is letting you down. That's why a lot of people who are new to technical analysis, they jump in, they're like, okay, technical analysis doesn't work. I'm 4 weeks into it, doesn't work. Technical analysis does work. You just don't know how to use it correctly. Stop blaming the tools and focus on what you could do to better yourself at understanding how to use them, because they do work. So RSI, guys, is literally one of my favorite, and I love the RSI because, and a lot of people have picked up on this already, but the RSI is so good at predicting predicting fake outs, and better yet, telling you when good entries are present and when good exits are present, because they can identify momentum, velocity, and speed of price action. And momentum, velocity, and speed helps move price, okay? If there's a lot of momentum, the price is more likely to follow through of the trend. If there's not much momentum and velocity, it is more likely to find its resistance, probably hit resistance zones and retrace. So it's really beneficial. And another thing I love about the RSI, it generally shows us patterns that we don't see present on the chart. Obviously, the RSI is not a direct reflection of price. It's not showing us price, it's showing us momentum, velocity, and speed. And that's why divergences in RSI are so powerful at predicting reversal points, because they can tell us there's a discrepancy between the price action and the momentum. And when you got a discrepancy between the price action and momentum, something's not adding up. We're going to find resistance. We're going to drop down. Same being said about bullish divergences. All right, now another thing we have these horizontal or diagonal resistance zones on RSI, which can also predict points of which the momentum will flip. And like I just mentioned before, momentum is incredibly important at predicting trends, or predicting whether we have the momentum to push through, as it tells us how the price is going to potentially move in the future. So when we have a breakout on the price chart, hopefully here, and a breakout on the RSI, we have 2 points of confirmation, okay? 2 points of confirmation that the price will move upwards, okay? That is what we're looking for. We would like a move past 23,100 plus a breakout of the RSI to confirm we have that positive momentum to push upwards. Now, we've been talking about this RSI. I know it's coming up on Twitter a lot now. We're starting to talk about it again. We've been talking about this RSI for a very long time. If you remember back to our video at the start of, I think it was even the start of July or even May, we said, keep your eyes on the RSI, particularly down here. Keep your eyes on the RSI, particularly down here. It looks like we're going to bounce back up to the top. And we've done exactly that, just that. That was one of the main reasons why we had faith that the Bitcoin price was going to bottom out and we're going to push upwards, was the RSI was suggesting just that. Okay, so we're looking for an RSI break. Now, of course, we've got the 200-day moving average. I think we talked about that already. I don't want to go too much more into it. I think that's about it for today's video, guys. I want to keep it nice and short and sharp. I think what you should be doing now is wait for this range to play out. Wait for CPI to come. Keep trading. Always trade. Trading is really important. You can always find opportunities when you're future trading, shorting, longing. There's always opportunity. There's no bad time to be particularly trading. There is a bad time to be trading with a lot of capital, and there is a bad time to be taking too much risk. And this isn't the time you should be trading with a lot of capital. This isn't the time you should be taking a lot of risk. But sure, if you want to keep trading, you can go ahead. But if you want safe entries, if you want clear trend, you have to wait for the zone to break. And then wherever the zone breaks, we will know where it goes. For example, if we break upwards, we have confirmation upwards. If we break this level here, we have confirmation, we go back downwards, potentially into this range, okay? That's it for today's video, guys. I want to keep it nice and short and sharp. Hope everyone learned something. I hope if you're new to the channel, you enjoyed the video. If you're watching to the end, again, thank you for that. And we'll catch you in the next video tomorrow. Cheers. Okay, guys, we're going to be taking a quick look at Bitget. And now Bitget is where I personally trade. I highly recommend sign up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.